This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Thanks for joining me this week. And since this is our first episode, I wanted to give a little bit of background on who I am and why I like value. For those who don't know, I've been Zach's value strategist for about 8 years now. I'm a long-term buy and hold type investor, both in my own personal portfolio and in running the value investor portfolio that I run here at Zach's. The Value Investor is the weekly service that I run that holds 20 to 25 value stocks. We hold for probably, I would say, a couple months to years. We have one stock in the portfolio right now that has been in there just about 3 years. So as long as the story is still good, we continue to hold. So I like trading and investing in the value area and have been doing it for some time. The Value Investor I've run since the middle of 2012. And if you're interested in checking out the Value Investor, in addition to this podcast, you can always find that on Zacks.com under the services link there. And we do have monthly trials that are actually quite cheap. So you can go over there and try one of the trials and see what's in that portfolio, what stocks I'm holding, and get the weekly market commentary over there. But now on to today's topic. I'm going to be talking every week about, various value strategies and things that are happening in the value world. Growth and momentum get all the glory, but it's really value that I find to be the most interesting. So I hope you do too. So today's topic is something that's kind of timely because the stock market's hitting the all-time highs, as most of you know. And I get this question all the time, like, where is the value? Everybody's talking about how the stocks are overvalued. Everything's expensive. There's no value anymore. It's gone. It's vanished. See you later. But that can't be true because there is always value somewhere. Remember, value stocks are those that are out of favor with the market and with other investors. So they're the type of stocks that people say, you tell them you're investing in it and they're like, why? Why would you be in that area? You should be in this hot tech stock over here. Or I've never heard of that stock. Like, what does it do? What's the point of it? So value investors kind of have to take a lot of hits because they're not in these glamour areas usually. And so you kind of have to stick to your guns, and you have to have a little bit more patience and determination to be a value investor. I always think back to the late 1990s when dot-com boom was booming. Everybody was buying all those hot tech stocks. They were basically day trading them. A lot of the companies didn't even have earnings and nobody cared. And a lot of people were attacking Warren Buffett, who, as many of you know, is considered to be one of the best value investors, at least of the last couple of decades. And they said he was out of it. He didn't know what he was doing because he wasn't in any of those hot stocks, and he was buying things like railroads and chemical companies. But, he was the one who had the last laugh. And so you kind of just have to roll with the punches when you're a value investor and ignore all the noise that you're hearing about how you're not in the right thing, and stick to your guns and what the fundamentals are. So when I think about what's going on right now, the hard part about finding value right now is that a lot of them might not be the right Zacks rank. So here at Zacks, we do have this ranking system that, is based a lot on earnings estimates. So when those estimates are rising, you get a higher rank. A number one, which is a strong buy, would be the best you could get. But when those are being cut by the analysts because something's going on at the company or in that industry and they see earnings declining, then that's when you get the Zacks number 5, the strong sells. So right now, a lot of value stocks, I feel, are in the number 4s, which is the sell, and number 5 strong sell category. And they can get in there a lot of times mainly because that area, something is going on in that whole industry. And that makes me think of what we saw happening in energy over the last 2 years. A lot of the energy stocks were either 4s or 5s, I would say about 6 to 8 months ago. And that's because all those estimates had to keep getting cut as crude prices plunged. Similarly with agriculture, a lot of the fertilizer stocks and even the agriculture equipment stocks They've seen earnings declines. They're going down in the lower part of their cycle here, and the fertilizer prices have all declined. So earnings are plunging on the fertilizers. So you're seeing a lot of number fives in that whole entire industry because analysts, of course, are cutting all their estimates there. Similarly, we've seen a lot of other beaten down sectors for various reasons. Some are related to energy, like the tools, big equipment, but some aren't related to energy. There's just been a lot of struggles in various retailers, especially apparel. If you were in any of the clothes retailers, it hasn't been real fun. So I look at all these areas and I think, there's got to be some value in there. So, while everybody's saying, oh, there's no value, and they're looking at all the hot stocks, which have high valuations, they're not considering all these other areas because why would you buy an apparel retailer right now? But again, as a value investor, we have to look outside the box and look at what everyone else in the market is ignoring. I would love to be a value investor and be in all the hot stocks. For a while there, I was trying to buy restaurant stocks because I just like them. And I believe the consumer is spending a lot of money at their restaurants right now, and they want to eat out and they want entertainment, but none of the valuations were working for me. And I was trying to stretch it a little bit, maybe I could do 21 times for this burger, restaurant chain, but that's not value. So you have to learn, like I have, to be patient and wait for the market to come back to you because it will. And interestingly, I'm watching the restaurant stocks again because they've kind of gone out of favor. They were hot for over a year and now they're not. But the valuations haven't quite caught up to the sentiment yet. They're getting cheaper, but they're not completely value stocks yet. But that's an area that you might want to keep watching. So let's talk about a couple of stocks that I do feel are values right now, because I like to give stock picks out. And, I know obviously everybody's looking. And like I said, keep an eye on the restaurant stocks, but they're not quite there yet, but I'm hoping they will be. But I picked two stocks this week in interesting areas. The first one I have for you is in the home builders, and it's Meritage Homes. The ticker is MTH. Sorry, I was reading my notes and it's not very clear there. But Meritage, they have all the classic value components. So their PE is only 10.9. They have a price to book of 1.2. So I look for price to books under 3. They have a price to sales ratio of 0.6. That's under the 1. That usually means they're undervalued. They also have a PEG ratio of just about 1, which I like. Anything under 1 means they have growth plus the value. That's like the super dynamic combination. They're supposed to grow earnings about 17% this year and another 10% next year. And I know what you're thinking, the home builders, they haven't done anything. I used to own some of the home builders in the value investor portfolio over the last couple of years, and I had to sell them because of various problems with the rank and because they really didn't go anywhere. So this is a classic value play, though, because everybody they don't like the home builders. They're out of favor with the rest of the market and with regular investors. They were the hottest industry way back in 2012. I don't know if many of you remember that, but I think the home builder index was up like 100% that year. So they haven't really done anything since then. But the housing market is on fire with these low mortgage rates, and the job market's still very strong. People want to buy homes and they want new homes. Now, Meritage is in a lot of the popular markets. They're in Northern California. They're in the Carolinas. They have a lot of building going on in Atlanta and super hot Nashville. I don't know if you live in Nashville or you are aware of how popular that city is right now. So they're trying to meet demand in a lot of these places. They are a smaller builder. They only have a 1.6 billion market cap and they have about 254 communities. They're not on the luxury side, but I did look at their average home price and saw that it was up all the way up to 400,000 now. But some of that might have to do with their markets in Northern California, which, as we all know, is a lot more expensive. So that might skew the number up a little bit there. But I like the home builders. Check out some of them. There's a few others that also would qualify under the value. So be looking around there. And then my second pick for this week is a Best Buy. Now, I know what you're thinking, like Best Buy, no, not them again. Didn't Amazon beat them? Aren't they out of business? But no, Best Buy is still hanging in there, and they're kind of finagling the business to get in a niche that Amazon can't be their competitor in. I know that's hard to believe, but they are trying to generate more revenue from home services. So when you buy that, big screen TV and you buy the super nice sound system and you want the home theater in your den, at least for me, I would have no idea how to set any of that up. I would be totally clueless. I would definitely pay to have someone come into my house and set up everything and just have it start, when I walk in the door. So that is the area they're focusing on. And obviously Amazon can't do these kinds of home services, but something like Best Buy can. And they actually make a connection with the customer. And then the customer might be more willing to buy other things at Best Buy and or have those things installed, because we are going to kind of a networking type of environment where all of our appliances and these theater systems and our thermostats and everything is all connected. Again, I'm fairly clueless on anything technology, so this appeals to me, and I have a feeling it will appeal to other people as well. The analysts also are bullish on this kind of move towards this area. Obviously, they have a lot of their standard business of selling the televisions, and they've done great selling Apple products. But the iPhone sales are slowing a little bit here, so that is what's made people nervous about Best Buy. But here's some of its value components, and you can just see how cheap it is. It has a PE of 10.9. Its price to book is 2.3. And like I said, I look for under 3 for value. Its price to sales is really cheap, just 0.3. So it easily qualifies in that area. It's not growing its earnings as fast as Meritage is, but you do have about 4% earnings growth this year. And the analysts are expecting about 6.6 for next year. So, you're not getting a huge growth story here, but it is cheap. So as value investors, we like to look at cheap, and I like to look that they are growing their earnings and they are expected to for next year. So I like that story. So Best Buy, its ticker is BBY. Just keep that in mind. Don't write off all the retailers, because all of retail isn't dead, and certainly not all brick and mortar retail is dead. That's kind of a myth. It's been debunked now. We still do go to the stores. So as value investors, keep an eye on some of these areas and these stocks that people, are kind of down on, because that's where we're going to find opportunities. For next week, I'm going to have more on what to do during this record stock market. Basically other techniques on how to be patient. And especially if you've been looking at some stocks, like I was just mentioning earlier, like the restaurant stocks, I've been pretty patient over the last year and a half. My patience may pay off. It hasn't yet, but I feel like it's getting closer. So I'm going to have some more stories on other areas that, you might have to keep patience on. And I do think your patience will be rewarded. So I'll talk about that next week, and cover a couple value stocks as well next week. So, thanks for joining us on the first episode of the Value Investor Podcast. Like I said, I enjoy everything value, and I think this is going to be a lot of fun. So I'll see you next time.
Listeners of today's program might have an interest in value stocks similar to those Tracey shared today. If you'd like access to her Value Investor Portfolio Service, which includes real-time buys and sells, market insights and commentary, visit www.zacks.com/valueinvestor or call toll-free 1-888-775-8348 between 10 a.m. and 6 p.m. Monday through Friday. Outside the U.S., call 1-312-265-9309. Again, that's www.zacks.com/valueinvestor or toll-free 1-888-775-8348. Outside the U.S., 1-312-265-9309.